Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, welcome back to the show.
Jim, pleasure to be back on the show.
John, what effect is the latest interest rate hike having on the juniors?
It's having a very negative effect, but it's also having a very negative effect on the broader market. On Wednesday, Jerome Powell, the Federal Reserve Chairman, increased the federal funds rate another 3/4 points in terms of prime rate. It's now 6.25%. And this was in response to inflation figures earlier this month that showed after no month-over-month inflation in July, it had crept up again in August, so the annualized rate is 8.3%. They are absolutely terrified about inflation, expectations becoming entrenched, and of course the the wage price spiral is in effect. Companies have been able to push price increases onto the public, and labor is saying, well, we need to have our cost of living adjustments. So the same sort of thing that we saw starting to happen in the 70s is kicking in here, and they're very concerned that this will run away from them. So they are throttling the economy, and they've indicated they will keep putting the interest rates higher. This will have a negative reverse wealth effect on existing bond holdings because, of course, the principal value of bonds goes down as the interest yield goes up. And in the stock market, the higher expected return from debt instruments means that lower PE ratios are required for stocks, plus the fact if you're going to induce a recession, you're going to see the profits start to disappear. So the general outlook is pretty negative, and of course, metal markets are going to be affected by a decrease in macroeconomic demand. So those have weakened. That isn't helpful for the resource juniors. And gold itself, gold today on Friday is down $25 this morning. It's now below $1,650. Bitcoin has also come under pressure. It's below $19,000. So there's basically an exodus from everything, especially given that the worst has yet to begin. The Dow has now dropped down to 29,400. It's now below that 30,000 figure. I believe it's now lower than the little dip it had a month or two or so ago. But what we're seeing in the juniors is the beginning of capitulation. And companies that have been winners this year, had reasonably good performances. We now have something bizarre called tax gain selling, where people say there's going to be a massive house cleaning in December as people just unload all these stocks that have failed in the last few years that are in their resource junior portfolio. They're hopeful that maybe it's going to be a penny higher in December, so they're in no hurry to sell now, but they're looking at big paper losses. So what are we going to do with these paper losses? Well, in the United States, you can carry 10,000 back to the year before. Canada, I think you can carry enough back to wipe out your profits from the prior year. But there'll be nobody really wants to carry losses forward, so people are selling winners. So that really hurts the juniors that have done well, as people say, when there's a downdraft like this, everybody's going to liquidate. It's feeling a bit like in 2008 when we had the securitized mortgage fiasco start to unravel. And today, that's the mood with the resource juniors. The venture index is now below $600, down 25 when I last looked today, and that's still about half resource junior listings. Resource juniors are still dominating the value traded on the venture exchange. All these non-resource listing people are fleeing those. There's no appetite for those. At some point, we will see a bottom. We are starting to see realization in the electric vehicle sector, which the car companies, they're absolute multi-billion-dollar monsters. They're going to keep along with their track even through all this price declines in the market. And the wake up for where are the raw materials going to come from, such as lithium? That's really starting to sink in. We see groups like LG, the battery maker, start doing deals with juniors like Avalon about securing future lithium hydroxide supply, but they're still not really taking the serious step of going in there and saying, we will help you finance, we will support you during the, economic feasibility demonstration cycle. They're still not quite there yet, but they are waking up and starting to feel the panic that they have not taken care of the raw material upstream source for their electrification of the transportation fleet. So bad day in general for the resource juniors, but there will be a very interesting bottom later this year. The yield curve is negative and getting steeper. So we will, the market's in essence saying, yep, you're going to create a recession. You're going to have to reverse all this. And then we have this backdrop too, as this was a very bad week for Vladimir Putin and his a special operation in the Ukraine. Modi and Xi both sort of said, this is not really helpful to our, prosperity, economic growth goals. What is the purpose behind this? And the Ukrainians have pushed the Russians back. Putin is now calling 300,000 new soldiers into service to send there. Russian people of military age are fleeing the country because they're starting to understand that the troll farms are full of crap, that this is all nonsense, there's no purpose behind this, and that Putin is destroying Russia's reputation on the global stage. And that, of course, makes everything scarier because he's like a cornered rat. And what's he going to do? Start throwing nukes around because he's got basically nothing left to lose. He's done. He's failed in this endeavor. It's impossible for him to become the new Führer of the world. And so the market's looking at all this. Europe's going to have a bad recession. This thing could turn into a nuclear exchange. Let's dump stocks. So very, very bad time.
Why has Galway Metals scaled back its drill rigs at Clarence Stream from 6 to 2 rigs?
Well, Jim, not only have they scaled it back from 6 rigs to 2 rigs, but they've scaled those 6 rigs doing double shift to 2 rigs doing a single shift. And the simple reason is cost cutting. In this market, it is becoming very, very difficult to refinance with all the metals, including gold, and at Clarence Stream, the target metal is gold. We are seeing metal price declines. We are seeing the street, insofar it does have capital, if it wants to give it to you, it's really bullying the companies. So at the current rate of spending, they're spending about $1.5 million a quarter. They expect to have about $8 million left by the end of the year, so they're in good shape. They took the hit earlier this year with the financing at around 40 cents, so the stock's down to 30 cents. But what's also kind of hurting the company, which is forcing them to bide their time, is we're seeing nasty capex increases. Earlier in the year, we saw IM Gold get hammered because of substantial increases in the capital cost of finishing the Coat Lake gold project in Ontario. And Marathon Gold on September 1st admitted that the 305 million Canadian capex to build Valentine, that is now going to be somewhere in the 470 to 490 million range. The stock was at $1.69 when that news came out. It got hammered, and then they announced a financing of $150 million financing at $1.10 for units, a bought deal. The brokers are stepping in and handing the money to the company during this time of stress. And then this week we saw another disaster. Lion One Metals, which has its Fiji project, in June it had spiked as high as $1.65 after intersecting a high-grade feeder system, which is what we've always hoped for, this relatively small-scale proposed mining operation. They announced a financing of $12.5 million, also a bought deal at 77 cents per unit. And the market is so negative, the stock is now trading at 65 cents. And because it's a bought deal, the company does have the money. So we're seeing this absolute trashing of these more advanced gold companies. And I created an outcome visualization for the Clarence Stream project of Galway Metals earlier this year, where I basically used the Valentine numbers when they reported their 2.2 million ounce resource estimate, most of which is open pitable. And I when we were doing the gold numbers earlier in the year, all the numbers were clicking, and now we are. I put in this. I switched to 305 million Canadian, which at the time translated to 266 million US. Increased that to 490 million Canadian, which is 366 million US. And the numbers that now generate an NPV of about 400 million, 11 million Canadian, which is a future price target of $1.88. So that's sort of just in line with the. So you need to have an NPV and that was using an 8% discount rate rather than the bogus 5%. You need an NPV roughly in line with the CapEx. So the project is still viable based on those revised marathon numbers for the Valentine project, assuming that those numbers turn out to be correct. But the drilling program that they're on now at Clarence Stream, it's really focused on building new ounces. Their goal is to get somewhere in the 5 to 10 million district scale ounces. It's an intrusion-related gold system. They are drilling the fringes of these intrusions that entered these meta-sediments in New Brunswick. And the focus right now is an area just to the northwest of the southwest deposit, which is what was the sort of Jubilee, Richard, George Murphy zone. Now they call it the SW deposit to make life simpler for the rest of us because it's all pretty much connected. So now they've got this so-called golden triangle to the northwest where they are starting to see the zone follow the flank of the intrusion, which takes a sort of a bend northwards that was projecting sort of northeast along that Sawyer Brook Fault. So that's where their drilling is right now. And the tantalizing thing they haven't done at the beginning of the year, I hoped they would be starting to hit some of these other targets, such as Oka, where they have very good soil geochem. Where the known deposits are, the soil geochem at surface is relatively low. But the big target, they call it the Gabbro Dike Complex. It's this very large area to the south of the southwest zone. They are still doing field work to generate targets in it. It's going to be a different style of setting than these sort of intrusion contact related systems. But any hope for drilling in that area will likely have to wait until next year. They're probably, if they're going to go beyond that triangle to the northwest of the SW zone, they're likely to head more to the southwest of it, where they still see soil geochem tracking the trend of that contact, which hosts the SW zone. So they're well funded at the pace that they've scaled back to. They can ride out this bear market. That's not going to stop people from selling it lower, but they do not need to be beaten up by the brokerage sector with bought deals at deep discounts, to which the market trades even lower afterwards as enraged shareholders dump their stock and just bail out. So Galway Metals continues to be a KRO favorite, and there's going to be some wonderful bottom fishing opportunities. There's going to be a downside limit as to how low gold goes. I don't think there's a downside limit to how low Bitcoin can go, because Bitcoin's just this digital mirage. Physical gold is still there, and at some point the general sell-off and the interest rate rises will come to an end, and we'll start seeing the repair of the global economy, and hopefully all these problems that Putin has created and the tensions that have emerged between the United States and China over Taiwan, all of these ease, and we get back to a growing global economy with an emphasis on the climate change, the energy transition that's needed to get the world back on track so that the younger generations have a future.
John, what did we learn from the recent update by Tower Resources on its Rabbit North drill program?
Tower Resources was going to drill 6 to 8 holes. At the time of press release, they were completing the 4th hole. They have had problems with drill crew competency, taking way too long. One hole was they lost it, but turns out that it managed to hit the edge of the lightning zone. The big story at the lightning zone of the Rabbit North project is earlier in the year, like after they reported that discovery hole in January, they assumed a northeast orientation for this shear structure through this, volcanic tuff that's has a significant fluid flow and has all the evidence of an orogenic system, whereas the backdrop is more of a porphyry type system. And the drilling that they reported sort of around summer, it didn't make a lot of sense. And they finally, Stu Averill did some deep thinking about what's going on and realized that the structure is actually north-south, and that the structure itself, because it's been more brittle and deformed, has been preferentially eroded and actually turned into a big wide ditch for a very young basaltic lava flow that starts higher up and flowed down, basically covered the shear structure, which would otherwise have been found by prospectors ages ago, and then created a bigger pond of basalt in the southern area. So the one hole that they drilled about 50 meters or so stepping out of hole south of the hole 26, it only got about 10 meters of what they regard as sort of this pyritic altered mineralization, and before it disappeared into what they call the Durand stock-related diorite plug. This is an intrusion that's come up. Its alteration is such that it's a tighter rock, so the later orogenic fluid flow would not have been able to penetrate this rock and leave its golden payload behind. So they figured that this plug is now 400 meters wide, and it's blind. The stock to the north, where historical work has been done, it's yielded 0.1 to 0.2% copper grades, 0.2 to 0.3 gram per ton gold, sort of a typical boring BC porphyry. But this body to the south, they've also intersected similar grades, and it might be a larger target for them, but it is not what they are going after right now. They also stepped to the north in hole 35. They got it through most of the structure, and then hole 36, they got a nice 150 meter intersection. They had to steepen it because from that same drill pad. So this is not going to be a true width, whatever it grades, but they have now confirmed that this zone, the lightning zone, does have a north-south orientation. They've drilled a scissor hole from the other side and could drill it in the southwest direction. It's not really quite properly plotted on the map. The map sort of, it doesn't make sense, but it's about 20 meters step out to the north. And visually, they've also seen, yes, this is the zone here. So we wait for assays. They've noted that the pyrite content is very similar to what it was in hole 26. So they've got their fingers crossed that they get similar grades. And they wanted to step farther north, but were unable to do so because these locations, drill locations, had been permitted, but because of some rules, they needed to be refreshed. The First Nations group in whose territory this is in, they were supposed to go there and inspect these dry creeks for archaeological evidence, and I guess this had not been done before. There really isn't any archaeological evidence of any sort, but the physical investigation by a First Nations representative has to be done to get the green light. And of course, the First Nations in this part of the world, which is sort of southwest of Kamloops, they are very busy, industrious people. Plus, hunting season is now upon us, so this wasn't exactly a priority. So Tower Resources was not able to do the 6 to 8 holes that it wanted. The last hole apparently went back to number 26 and stepped to the west, and it's a deeper hole. We don't know yet what that has intersected, but with these type of orogenic systems, the idea is that the gold grade tends to be consistent over substantial vertical extent, 1,000 meters, unlike the epithermal systems, which have these boiling zones and these deposition windows related to the water table. So the sort of the verbal message in the press releases, we're right about the orientation of the lightning zone. We will have to wait for these assays. They do want to do another $2 million financing. They can work year-round in this area. So probably early November, we'll get the results. And if they confirm the sort of grades that we saw in hole 26, the discovery hole, this emerging discovery may get the legs that it needs to get properly funded and set up for a year-round program that can begin in January, February.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.